Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back, John.
Jim, I'm glad to be back.
John, Arizona mining is up 50% today and has traded over $300 million worth of stock. What's going on at Arizona?
Well, we have a very substantial takeover bid. It's a 2.1 billion Canadian value bid. It is one of our Discovery Watch juniors that we introduced quite early when we started this show almost 2 years ago. Last night, South 32, which is the BHP spin-out from a couple of years ago to hold their so-called miner assets, they offered to pay cash, all cash, $6.20 per share of Arizona Mining. That values the company on a fully diluted basis at $2.1 billion. And it's at a 50% premium. In fact, on Friday was the annual general meeting, and it must have been very interesting for management to keep a straight face if anybody bothered to attend, because they would have known about this, but this has been a very well-kept secret. So this is important because it creates a substantial new inflow of liquidity in a bear market that is starved for capital inflows. In fact, we've seen capital outflows, money being siphoned off by blockchain and cannabis type deals. This is also the third big score for Richard Warke, and most people have no idea who he is. They hear of people like Robert Friedland, who is a serial scorer, also Ross Beatty, who has multiple major successes. But Richard Warke has been this obscure individual who in the past 4-6 years, 2011, Ventana Gold got taken out by $1.4 billion for its high-grade gold discovery in Colombia. Then in 2014, Augusta was taken over by Hudbay for about $500 million worth for the Rosemont copper deposit, also in Arizona, and that's sort of stuck in permitting limbo because it's going to be a big open pit mine. And of course, Arizona is home to very many people who don't want anything in their backyard happening. The Hermosa Taylor project itself, this is his biggest score to date. And this is the second try, because the first try started with the Hermosa Central deposit, which was this manganese, silver, zinc oxide deposit that had been known about for ages, which was the reason Richard first acquired this project. It was called Hardshell at the time, and they did a PEA, I think even a PFS on it, which showed that by the time metal prices ended up where they did after 2015, that this project was not going anywhere. But Don Taylor, who recently won the Lindsley Thayer Award for the discovery of this deposit, in 2014 he was looking at the sulfides at the base of the pit limits for the oxide mineralization and started drilling some holes. And lo and behold, they found a stratigraphically controlled zone of high-grade zinc, lead, silver mineralization with a few other elements such as copper in it. And they started developing this, drilling this off, and it was completely off the market's radar, even though you could see these news releases. But of course, zinc was still around 80 cents at the time, so nobody really cared about zinc. I recommended the stock at the start of 2016, first as a bottom fish pick. Bob Wares, who was a director of the company and who, if he still owns his 5.5 million shares that he did in the last AGM circular, has made out as a bandit with a $30 million score. He pointed this out to me in October 2015 at this Montreal Explore show where I was presenting. He said, you got to take a look at this. This thing is huge. And I did. And in January, I sat down at the Cambridge show with Don Taylor, and he walked me through it, and I did all the numbers, did an outcome visualization, and basically at 50 cents, then made it a spec value hunter pick. And that was in March of 2016. Within that same month, This project, Bob Wares had brought it to the attention of the Osisko Royalties Group, of which he is part of. They bought a 1% NSR for $10 million, which was stunning in itself. And then friends of Osisko put in another $5-6 million at 56 cents. Bay Street pretty much ignored it, but by May, they finally understood that this was very interesting. An $18 million deal was done at $1.45 or something like that. And the company started drilling off this project, delivered a resource estimate later that year in October, and this led to a $36 million bought deal at around $3, and the show was off and running. But as you may remember, Jim, in mid-December, a short-selling syndicate tricked a British publication to write a fake news attack on the project, calling it another Bre-X-style fraud, which was preposterous because there were very serious people like Jim Gowans, who's put multiple mines into production, as a CEO of this company running this program. They argued that there was a manganese content within the zinc concentrate, which was too high to be acceptable by any smelter in the world. And this manganese content had been flagged in the technical report for the resource, and it wasn't viewed by management as a big deal. But this fake news article made it out that this was a fatal flaw for the whole project, that it was actually worth zero, and that this was a big, giant pump and dump operation. And that really hurt the company. The company ended up responding that there are no other penalties in the zinc concentrate, and the manganese level, while above the level that the smelters like to see, it was low enough that this concentrate could be blended with other concentrates from other mines, which might have higher levels of other penalties, to produce a concentrate that was perfectly acceptable for the smelters. And that, given that the concentrate is only a fraction of the concentrate that the global smelter system processes, this was not going to be a problem. And but the market remained skeptical until May of last year, when South 32 came out of nowhere and invested $110 million at $2.45 to acquire about a 15% stake. They also launched a program where they had Blackstone buying stock in the market, accumulating. There was a 20% limit, a standstill agreement that forbade South 32 from acquiring more than 20% until November 15th of 2018. They managed to buy about 6 million shares, probably put an extra $20 million through open market purchases. They shut that down in May because they were probably getting too close to that limit. So this development here is really a really positive thing for the sector. The mine is world class. They did put out a PEA in April of 2017. They put out an update in January of this year, which showed that there was a substantial value, helped of course by the better zinc price, though they're still using a relatively low zinc price of $1.10 a pound rather than the current $1.40 that we have. The resource now that they're using, the measured and indicated, it's over 100 million tons. The new PEA suggested an after-tax NPV of $2 billion and a 48% IRR at a 8% discount rate. So what the company South 32 is paying, 2.1 billion Canadian, or about 1.6 billion US, is fairly close to the after-tax NPV. But that doesn't take into account the possibility that there is a lot more ore. The 10,000 ton per day limit that they chose for the mine, it's based on the logistics of mining this type of ore underground, but there's substantial additional resource, and if we do take the higher zinc prices seriously, this project is worth a lot more than the $2 billion US that the that South 32 or that Arizona Mining indicated in its PEA. So why would they pay fairly close to this amount right now? The project is now in feasibility study mode. It is confined to the patented claims. The U.S. Forest Service that controls the Coronado Forest that surrounds this whole area, they are very reluctant to permit even simple exploration. So everything is being restricted to the patented claims, and they hope to have they've started a decline to go down underground and finish off doing the detailed drilling needed for a mining plan. That's all again on the patented ground. But taking this company off the public radar right now is a strategically smart move. It is an accepted bid by management. There are no breakup fees that I saw, which conceivably means that if a better offer comes along, it's not going to cost the company anything. However, I do not think that any other party is going to step up to the plate and offer more than $6.20 cash per share. It would have to be a substantial markup, not likely to happen. So the other thing is the resource estimate and all that. There's still lots of drilling done. There might be some complaining about whether or not we need the extra information to make a decision. This is not a simple takeover bid. It is a plan of arrangement. It has to be voted on within a meeting that will be held in September. But all they need is a simple majority, 34% by the management group, of which Richard Warkey at 88 million shares is the largest shareholder. That will vote for that. What you're seeing in the market now are probably arbitrageurs. They're paying about 7 cents or so less than the $6.20 takeover bid price, and they're hoping to clip a few pennies during the next 2 months of waiting game. I'm pretty sure this is a done deal. There aren't a lot of big players that can make this type of bid. This is a very positive development for this section.
We'll have more with John Kaiser right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're chatting with John Kaiser. John, does the Arizona mining buyout have any implications for other Discovery Watch juniors?
I think this buyout really should stimulate interest in companies such as InZinc Mining, which also has a polymetallic scarn carbonate replacement style system with zinc as a major metal. Copper is an important one in its deposit. It's located in Utah. Utah's considerably more mine-friendly than in Arizona, and they have a resource that if you plug in the current metal prices based on the PEA that they published in 2014, the project should be is in the money and should be looked at. It doesn't have the scale of Hermosa Taylor, at least not at this stage. A couple of weeks ago, they put out the results from the first hole, which opened it up to the west. And as I explained a week ago, the assumption that it was closed off was based on a deviated hole that was assumed to have been drilled straight many decades ago. The market has not yet jumped into in-zinc as a kind of a parallel type of play on the Hermosa Taylor, and it's possibly because there's uncertainty about how the exploration drilling is going on. The hole they reported a couple of weeks ago, that was a bonus surprise. It shows that the indium-rich zone is open to the west. They had a news release that wasn't very clear about the other holes. The second hole apparently has been drilled as a step out to the eastern limits of the scarn mineralization. Assays for that should be available in a week or so. But the third hole, the one everybody has focused their attention on, the 650-meter step out, testing an old intersection at 700-meter depth that intersected 3 meters of high zinc and copper. This hole has now been completed to a length of 3,000 feet, which probably puts it at 700 meters. It has been shipped for assay, so it's obviously not devoid of anything of possible economic consequence. However, it sounds like they're not sure where this hole ended up, or more precisely, where that original hole ended up. And that original hole was never surveyed, and they suspect that where it was supposed to be wasn't where that hole actually was. Just as this other hole to the west of the deposit was assumed to be straight and came up with nothing, and so everybody assumed there was nothing in this direction. This hole, the original hole, appears to also have deviated. So they've got now this hole, 3,000-foot hole, in for assay. It'll take 3 to 4 weeks for us to get any news. They're not really saying anything about the visuals because they don't want to play that game, but they are shifting the drill back towards the west, where they now have running room for extending the resource, and this is positive because it is shallower. What they were chasing in the east was about 700 meters deep, so this would have been a bunch of very expensive holes. The company does not yet have the brute force backing that companies such as Arizona Mining was able to attract for its project. But heading west and continuing to probe the limits of the system, this is a very similar play. I'm a shareholder of it. I'm optimistic that we'll see some of this Arizona Mining money that's freed up by this South 32 takeover bid flow into in-zinc mining over the next few weeks.
We'll have more with John Kaiser right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with John Kaiser. John, are there other places that are kind of similar to the first thing that we talked about where you have a replacement system in play?
Yeah, the one that I've been talking about a fair bit is Lorain Copper Corp, which managed to acquire the Stardust property in central British Columbia, not that far from Serengeti's Quenica copper gold project. I'm suggesting that now that the farm-in partner, who has the right to earn 100% of the project, at which point then Lorain Copper will get 30% of the existing issued shares. This company, Sun Metals Corp., it is now publicly trading. It is headed by Mark O'Day and Don McGuinness. This is a strong group. They raised $6.5 million earlier this year as part of the reverse takeover of a CPC called North Bluff. They did this at 25 cents with a five-year warrant at 35 cents, 25 million of these warrants. Kind of a similar structure to the Inzinc story where we have this substantial overhang. And just as a sign of what a bearish market we are in, this stock now sits here at 21, 22 cents doing really nothing. It's like obviously the financing is not quite free trading yet, I don't think, so maybe there's no reason to get anybody very excited. But the Stardust system has had a lot of money spent on it. It delivers high grades. It has a modest resource. They want to build a resource into the 5 to 10 million ton range. Obviously, this is not the same as a 100 million ton Hermosa Taylor system, and the geology it's not as well understood. But the plan is to spend $5 million between now and sometime in November when they have to shut down work. They're already in the field setting up drill pads and doing various geophysical surveys, and that with the plan to start drilling in August. But we won't be in a position to see any assays, market-moving assays, until likely early September. And what will be really critical is, as this new approach gets taken by a group that has put a completely different set of eyeballs on this project, will we start seeing a geology emerge that is bigger and better, that gives them a target where we say, wow, now we're into the zone. It's kind of like what Inzinc Mining is trying to do with the 650-meter step out to the east. It's tag into something that's slightly different from what the known resource is all about, and then just start following it in a systematic drilling manner. With the Stardust project, we're hoping to see something similar emerge where they finally say, aha, now we understand what all this other scarn mantle mineralization is related to. Now it's a mechanical process of just following the zone and showing that there is a substantial underground mineable resource present on this project. So Sun Metals Corp is the sort of new Discovery Watch Junior that we're going to be focusing on, while keeping Lorraine Copper Corp really in the background as a potentially large shareholder in this project, if indeed it delivers the discovery we hope to see.
John, thanks a lot for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Godwin.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of Howe Street Media Incorporated.